Everyone, it's Dan Basse and Ben Buckner here on the 21st of October, Tuesday. We didn't do a video yesterday. Again, there was problems with AWS, prevented some of the taping from our end. So we didn't want to come out later in the afternoon. We're going to start over here today. It's amazing how disruptions on the internet can cause disruptions in life. That being said, there's a lot going on in the grain markets. Of course, Trump is trying to force a trade agreement on China, including soybeans, threatening, of course, that he will look at Boeing airplanes and airplane parts as part of the negotiations if China does not buy U.S. soybeans. That had the soybean market in what I would call a melting up mode, realizing that maybe the hammer from Trump is coming down on China and see how many beans he could do. Now, soybeans today are trading nearly 50 cents above where they were at the same date last year. As the U.S. soybean market rallied yesterday, Brazilian premiums in the export market collapsed, down about 10 to 12 cents in the period from February, March, April forward. So again, those are things that are important. Whether or not China needs a soybeans from the United States is going to be interesting. If you look at Dalian meal futures here this morning, they didn't pay much attention to Trump's rhetoric. They're not changed a lot. I would imagine that if U.S. soybeans were coming into China in style, Dalian meal prices would be being pressured. So the Chinese markets are not voting that a trade deal, including soybeans, will be accomplished. So lots of tensions, lots of uncertainties, and that's kind of the way the markets will be heading into November 1st. That's the key date in terms of Trump and Xi getting together. And Trump has promised that's a date he'll look at tariffs either increasing or coming down. So I thought today Ben and I would look at some of the attributes which are going on in global trade. Ben's going to take you through something in the Chinese markets and then talk a little bit about Colombia. Colombia is the fourth largest U.S. corn importer. However, the U.S. Colombian political tensions are quite high, with Trump targeting Colombia as a drug exporter and the president being involved. So, Ben, I'll turn it over to you. Take us where we need to go in terms of understanding these markets.
Yeah, and I think rightfully so. We spent the first couple of minutes just talking about China and headlines. And so, again, a lot of things we're going to talk about are going to be in the top context of if you see corn at 440 or 27, 26 contracts in soybeans at $11, what do you do with them? What's been interesting to me, I think, and we really since maybe last Thursday or Friday, the soybean market, I don't really know what inherently is priced in, but it moves based on Trump social media posts. So I think this is all about in medium term, does China come back to the U.S. market for soybeans? And that's it. And I think that's to some extent unknowable. We're not sure exactly how things evolve at the APEC meeting later this month, but just be prepared for additional volatility. I think we'll take you through the structure of the grain markets. And I guess to some extent, we're going to isolate or exclude U.S. trade policy. And what do markets look like? I think that is probably still to us long-term the number one factor, world grain prices and South American weather. So it's different, I think, when we talk about, Chinese trade, Chinese imports, U.S.-Chinese trade deals. Things look different than they did in 2019, 2020. So all we can say, and I think this is maybe the best proxy for Chinese supply and demand of things today is futures and cash prices. So if we look at, spot Dalian corn in China, it's in a downtrend still. It's done really nothing for the last couple of weeks, and today is about $7.55 per bushel, which sounds lofty, but we still think that is at or below the cost of production in China. The difference between the U.S. and Chinese markets also, we're not seeing any import margin whatsoever. So it doesn't seem like the corn market in China is telling us that there is a need for bulk imports. And the last 12 or 14 months, China, for all intents and purposes, has imported zero corn. So I think that's telling, and the market's still going down despite them having not imported anything. The meal market for the last 10 months has been stuck, almost every week, between 390 and 420 US dollars per ton. So it too is very dull. I don't think it's indicating that there is some current or even future issue with respect to protein meal supplies. We also know that there's probably a decent amount of Argentine soybeans heading towards China, in the next month or month and a half. So China's meal market, at least today, the best proxy that we've got is not telling us that there is a supply issue. And so again, thinking about what happened in 2020, you can see that corn prices in China were very lofty, and the meal market started this, what was a long-term uptrend. So that's different than what is happening now. So if we look at the difference between the U.S. and Chinese corn markets, it's pretty unremarkable. Let's call it, pretty weak, this premium in China. And again, thinking about, we got to kind of the end of 2020 and things changed pretty dramatically. China, one of the largest food importers on earth, and amazing growth. But check out what we saw on the green line from about September 19th to June 2020. The market was telling us that maybe China actually needed a bunch of imported ag stuff. It doesn't seem like that's the case today. So just keep this in mind as we're worried about volatility based on U.S.-Chinese talks. I think at its core, the hog market is just kind of on its face in China, and that's been the case for a long time. The market there, the hog market, totally ignored what are usually pretty positive seasonals, second half of summer. And it just kept moving lower. So today we're 73 cents per pound or so. Yeah, the peak 2020, 2021 is about $1.90, $2 per pound. So again, markets in China aren't really signaling, I think, the need for imports. And also, we want to think about, the Phase One agreement, which was, very, very good policy in the U.S., but also simultaneously, China was recovering from, ASF. They lost, almost 300,000 head of hogs in kind of a 12, 18-month period. Pork production collapsed. They needed to rebuild that hog herd very, very quickly, and so they needed to import a lot of stuff to make that happen. So it's kind of hard to separate that from Phase One. But anyway, what we're looking at today is very different. They are, I think, in liquidation mode in their hog market. So the opposite of what happened in 2020. So again, just thinking about this as we get into, maybe trade talks. And also, China's got a lot of issues. We've talked a lot about even new IMF data. There's between now and 2028 going to lose another 10 million people. The population contraction continues. Growth GDP-wise, pretty ho-hum. If IMF is correct, by 2029, you've got growth of less than 4% annually in China. So just kind of like the rest of the developed world, it's no longer a huge growth engine for things, especially with respect to food demand. So also picking fights with other countries, and just wanted to quantify that some of these countries, China, of course, but Colombia as well, a sizable and growing importer of U.S. origin corn. So, we've stopped data collection. The U.S. government's closed, but through July 2025 had imported 7 million tons of U.S. corn. That's a record for them. And we put them on track to, probably be the third largest buyer of U.S. corn in crop year 24-25. So this could amount to 250, 300 million bushels annually. So just a big market. We'll kind of monitor if there is retaliation. That's always what's most important when these trade fights and trade wars develop. So we'll be watching news from Colombia pretty closely. And then just kind of lastly, again, thinking about what do you do with rallies? What's ahead for global supply and demand? We are looking at South American weather that looks pretty favorable. It's abnormally dry in Brazil today, but there is this pattern shift coming in about 5 or 6 days. And so it's going to rain a lot in Argentina this week. It's going to rain a lot in Brazil next week. The result is the next 2 weeks, everyone gets about 2 inches of rain. So things still on track there, I think, and no major issues. And maybe the dryness accelerates soybean planting in places like central and northern Brazil. So that's kind of where I say things. And that's what we're looking at. China, Chinese markets, South American weather, top of mind.
Well, I think it's a good rundown, Ben. And if you go back in time, we're now fighting the U.S. and South America for the Chinese market just because there's no other growth markets out there. And so if you look at non-Chinese destinations, there's no growth in soybean imports. And so if the Chinese are slowing down to, let's say, imports of 95 to 105 million metric tons annually, and South America continues to grow its soy production, we're going to end up with growing stocks. And so, I think Ben and I both agree we are in a bearish landscape. Unfortunately, I hate to say that, but it's part of our business. And our job is to keep farmers and traders in business. And by doing that, we're looking at opportunities to manage risk. And so that's where our heads really go around this. Ben, any closing comments? I thought it was a good rundown on China. That's that one market we must have, and pork prices at 70 cents a pound surely doesn't bemoan any kind of demand surge there.
Yeah, so I think that's what we'll be looking at. I think it's more so than rhetoric between the two sides. Are the Chinese markets going higher? That's, I think, the biggest canary in the coal mine if we're to see Chinese imports. But otherwise, I think you're right. We're managing risk. There are ingredients for rallies. Geopolitical headlines. Those are fine. There's room for those, but just be prepared. I think manage long-term risk, because again, to us, it's the South American weather favorable or is it not? That is the next directional driver.
Yeah, I think that's right. South American weather, after we get beyond November 1st, will be the driver of whether or not we have a trade deal. Everybody have a great day. Good luck in trading today. We'll be back tomorrow and talk about the other landscape of the grain markets, which is going to be what maybe potentially Russian wheat plantings. And is there a long-term story developing in wheat? Take care, everybody.